for joining us today. Hello and welcome to Business Daily. I'm Lee-Jiun in Seoul. Before we get started, let's first get a quick look at today's highlights. It looks like Korea and Iran are going to keep the Korean won-based payment system after all, which has been in place since 2010. Not only are Korea's exports on their longest ever decline, but they recently posted the sharpest drop since 2009. This all as last year's current account surplus topped $100 billion. We'll sit down with an expert to talk about this. But first, Korea's consumer price growth sunk back into the 0% range last month. But there seems to be a pretty big discrepancy when it comes to how people feel about prices and the actual numbers. Our Hwang Jae tells us why.
I'm in downtown Seoul, one of the most bustling districts in the capital city with no shortage of restaurants. The store rent in this area shot up over 30% in the third quarter last year from a year ago, pushing up costs not only for restaurant owners, but also their customers. So it's no surprise that demand for dining out remained sluggish on top of a loss of appetite already due to the country's feeble recovery momentum. Because of higher rental fees coupled with pricier labor and ingredients, prices on restaurant menus went up over 2% last year. This growth is in stark contrast with the overall inflation rate that stood at below 1%, explaining why people feel prices are running so high when the actual figures are low.
It feels like prices have risen in general, especially food products.
A radish cost about $50 the day before yesterday, and today, when I went to the supermarket, it was around $1.50. A bundle of green onions was nearly $4.
Regardless of how people feel about these costs, overall inflation continues to sit low. Statistics Korea said Tuesday prices edged up a mere 0.8% last month from a year ago.
Prices in the service and agricultural sectors have risen around 2.4%. Petroleum products and gas prices affected by plunging global oil prices drove down overall inflation.
So while the prices of products linked with oil have dragged down price growth in general, goods and services closely intertwined with people's daily lives climbed significantly more. Experts also say the math and consumer price growth could be done differently.
Generally, when calculating the inflation rate, greater weight is given to product groups that consumers spend more money on. So it's price-based. That means the figure could be more reflective of the consumption pattern of those with high incomes.
With that, some point out there should be a separate price growth figure for low and high income earners to provide a more well-rounded view. Hwang Jae, Business Daily.
Finance Minister Yoo Il-ho has met with economy-related ministers and key business leaders for the first time since filling the post last month to step up the drive for economic growth. In the meeting, the finance minister told business leaders that job creation must start from companies and that the government will provide its full support, asking for greater employment and investment. He also added the government will extend more help to exporters and aid new industries, as requested by business leaders, while pushing forward with regulatory and labor reforms. The chairman of the Federation of Korean Industries, Chang-soo, said corporations will take the lead in creating high-quality jobs in cutting-edge industries and asked the government to establish legal and institutional frameworks that will invigorate growth in new sectors. Korea's national debt is set to reach a new high this week. People stand alert as the total sum is expected to top the 600 trillion won mark for the first time. And especially concerning is the speed at which debt is rising. Our Eunice Kim has more.
Ahead of Korea's Lunar New Year, government debt is swiftly headed toward a new record, on the other side of 600 trillion won. The National Assembly Budget Office projects the country's debt is rising by $1,300
per second and poised to break through $499 billion by Friday. By the end of the year, the debt load is projected to grow by some $41 billion, reaching more than $500 billion and surpassing 40% of Korea's GDP. The biggest worry, though, is the speed at which the burden is rising. If before it took less than 3 years for the tally to jump by another 100 trillion won, now it's forecast to take just a year and 7 months. And the Budget Office says it could surpass the 700 trillion won mark by next year. But the government says Korea's debt standing is still good, ranking the 5th lowest among 27 OECD nations.
As confirmed by international organizations and credit rating agencies, our fiscal soundness is still among the top in the world.
It's true, other countries' debt-to-GDP ratio, like Japan, the US, and France, are over 100%. But concerned voices point to the fact that while nominal GDP is growing at a rate of 3.2 times per year, government debt is speeding by at 9.5-fold. And as the state shoulders more public debt to prop up a slowing economy, it stands to spend even more in the years to come, as Korea sees a steep drop in its economically active population and a rise in the ratio of the elderly. Eunice Kim, Business Daily.
South Korea has jumped 2 notches to 27th on this year's Index of Economic Freedom. What does this mean? Our Park Ji-won has the answer.
The U.S.-based Heritage Foundation, in partnership with the Wall Street Journal, has announced the results of its annual Index of Economic Freedom. Hong Kong topped this year's list, followed by Singapore and New Zealand. South Korea ranked 27th, making it the 7th highest Asian country on the list. South Korea scored well in terms of regulatory efficiency, particularly business and monetary freedom, but got relatively low marks on labor freedom and freedom from corruption. On the overall list, the United States was 11th, Japan 22nd, and China 144th. North Korea remained rooted to the bottom. The index measures the economic freedom of 186 countries based on a variety of subcategories, including trade freedom, business freedom, investment freedom, and property rights. 8 countries, including Syria and Somalia, were not graded due to their overall failure in state affairs. Park Ji-won, Business Daily.
Korea's current account balance for last year set a new record, topping $100 billion. But this news isn't all good, considering the country's struggling local exporters. Take a look.
A current account surplus is seen as the broadest gauge of cross-border capital flow. According to preliminary data from the Bank of Korea, the country topped $100 billion for the first time ever in its current account balance in 2015. The surplus reached $105.96 billion, up 25.6% from the previous year's $84.37 billion, and nearly doubled the figure tallied in 2012. The country's surplus streak comes as imports fell faster than exports, stoking concerns about a slow growth trend, as the surplus puts upward pressure on the Korean won and hurts local exporters. In fact, outbound shipments in the first month of this year plummeted 18.5% compared to a year ago, marking the biggest drop since August 2009. How will Korea be able to recover from its slow growth surplus trend while boosting its exports and consumption?
And to tell us more about this, Professor Yang Jun-suk from the Catholic University of Korea joins us in the studio today. So good to see you, Professor.
Happy to be here.
All right, so Korea's current account balance surpassed the $100 billion mark for the first time in Korea's history. Now, usually this would account for a celebration, but not the case right now for Korea. So what does a healthy current account surplus usually suggest?
Okay, well, if you talk with economists, we usually like our current account to be averaged around 0 in the long term, because that means we're buying and selling, exporting and importing more or less equally. But if we do have a surplus, then we would like the exports and imports to be growing at the same time. Hopefully, exports will grow slightly more than imports so that we can have a surplus where you're both selling and buying more.
Right. But then, like we mentioned earlier in the report, Korea has been seeing the so-called slow growth surplus. What are some of the factors that are causing this, and what exactly is this slow growth trend?
Okay, some are just natural reflections of the global slowdown. Korea imports a lot of parts nowadays, and if we don't export as much, we're not going to import as many parts. The overall oil prices in the world is currently very low, and a lot of products that Korea exports are refined oil, processed oil. So if the oil prices globally goes down, we're paying less for oil, but we also have to charge less for oil that we refined oil that we export. So those are natural, but imports also reflect domestic consumption, how much people want to spend, and domestic investment, the investment goods that we import from abroad. And the fact that the imports are falling is worrying because that shows that domestic consumption and domestic investment are still not catching up. And of course, the low exports reflect the global slowdown, so it just reflects slowdown domestically and internationally.
So you're saying despite the fact that Korea's exports dropped the most since the global recession, imports plunged even farther?
Yes.
Oh, wow. Okay. Well, but then I feel like that this surplus streak would actually help given that volatile global markets are triggering foreign capital outflows.
Well, the fact that we do have a current account surplus means that there's more dollars coming into Korea on the net. So it does reduce the chances of financial crisis somewhat, the foreign exchange rate crisis. But again, it shows that Korean consumption sentiments and investment sentiments are weak. It shows that the export performances of the companies are week. And if you're a foreign investor, you're looking at which companies to invest.
Right.
And those are not good signals for investing in companies.
Now, another interesting thing to note is that Korea's current account to GDP ranked 5th among OECD countries. Can you tell us more about other countries' current account surpluses?
Okay, well, the OECD country with the largest current account deficit as a percentage of GDP is Switzerland. And then Germany is ranked 3rd. Korea right now seems to be ranked 5th, 8.0%. For the last few years, that has been Korea's ranking, more or less. The percentage was lower, but the ranking, it's about similar. In fact, there's not that many countries, even outside the OECD, which has a higher current account surplus as a percentage of GDP. The US only has 2.7%. And in the third quarter of last year, Japan, they have, they're also, their current account surplus is smaller percentage of GDP. That is one of the reasons why a lot of countries feel that Korean won is undervalued right now. Again, economists tend to like current account surplus averaging around 0, but because Korea has been having such large surpluses for so long, it does make people tend to be suspicious that the Korean won is undervalued.
And going along with that, there are growing concerns that the surplus streak could put an upward pressure on the Korean won, the local currency, and possibly negatively affecting local exporters.
Yes, so that's not going to be good news for exporters because the market is so competitive right now. But there's also suspicions that perhaps it won't be as harmful as what people fear. Because, well, taking the case of Japan, they had massive devaluations. And their dollar value of their exports only went up by about 4% in the last couple of years. So the lack of exports is partially due to the perhaps the value of the Korean won, but probably more due to the global slowdown and the lack of global demand overall.
I know you mentioned Japan a little bit just now. I mean, Japan's current account logged a surplus for 17th straight month, but its account surplus is quite different from the one that we've been seeing right now. So now people are saying maybe Korea should also try to lower its currency.
Okay, well, that will not hurt, at least in terms of export side. side, but you also have to look at behind the figures. One of the more interesting aspects of Japan's current account surplus over the last few years is that their trade account is actually in deficit. So while their exports have been improving, their imports are more than the value of their exports. And the reason that they racked up a current account surplus is that they have other sources of dollar income or foreign exchange income other than goods exports. For example, they invested in a lot of companies. They established a lot of overseas companies while they were having a very high trade surplus in the 70s and 80s and early 90s. And the income from that, as well as income from technology licensing and so on, is making up for the trade deficit. So it's at least for me, I think it's a lesson that Korea should actually invest more abroad.
Now, with this global slowdown and global economic growth expected to continue for the time being, then how do you think Korea should recover from this slow growth surplus, and how long do you think this will last for?
Okay, well, as we've seen, the international environment is not very good right now. Some lowering of the exchange rate may help, but it also might have some problems in the investment, the stock investment that foreigners could do in Korea. So any exchange rate adjustment should be done very carefully. On the other hand, if you look at the consumption share in the GDP, then Korea is only about 52% of GDP is in consumption, which for an advanced country, for an OECD country, is actually fairly low. So I think this emphasizes again that we should really concentrate on domestic economy, how to vitalize the domestic economy rather than trying to do it through exports, which we don't really have the resources to do because Korea is only about 1-2% of the global economy.
Right. Thank you so much for your insight today, Professor.
Thank you.
And that does it for today, but we'll be back tomorrow at the same time, same place for your Business Daily, so don't forget to tune in then. Thanks for watching, and bye-bye for now.